This is the truth about gold. Listen up. So gold recently crossed $5,000 an ounce for the first time in history. It hit an all-time high of $5,589 in January. Is it worth buying or are you too late? First of all, let's start with what gold is really. Let's start simple. Gold is a physical commodity, a precious metal. But for thousands of years, it's been way more than that. It's been money. Civilizations from ancient Egypt to Rome use it as currency. The US dollar was literally backed by gold until 1971. When the devaluation happened, Nixon ended the gold standard. Since then, gold has traded freely in global markets and its role shifted from money to what investors call a store of value, something you hold when you don't trust everything else. Right now, people don't trust much. Gold started 2025 around $2,600 an ounce. Today, it's trading at around $5,000. That's roughly a 90% gain in just over a year. So what's driving it? There's three things. One, central banks are buying aggressively. Goldman Sachs estimates central bank purchases are averaging around 60 tons a month, way above the pre-2022 average of 17 tons. So we're hitting all-time high purchases by central banks. Number two, geopolitical chaos. US-Iran tensions, Middle East instability, trade wars. So investors are simply running to safety. Number three, a weaker dollar. The dollar is weakening and rate cuts are back on the table. So gold doesn't pay interest. And when that happens, gold gets more attractive because if interest rates go down, there's nowhere to put your money to gain interest in bonds. So people recur to gold and sometimes equities. From 1971 to 2024, stocks returned around 10% annually, right? Returned 7.9%. So over the long haul, really equities win, right? But gold isn't really supposed to beat stocks. It's supposed to survive what stocks can't during periods of high volatility. So JP Morgan, a big bank, has the target of around 5,400 an ounce for gold. Goldman Sachs, another large bank, is in the same range. A Reuters poll of 30 analysts has a median 2026 forecast of around 4,750. That's the highest consensus in polling history. Here's the bottom line. Gold isn't a get-rich-quick play. It's a portfolio insurance, if you will. You're already invested in stocks and you want to hedge against uncertainty. A small allocation of gold is fine, 5, 10%. That's usually what advisors recommend. Just know that you're not buying growth, you're buying durability. This is smart money. Fall for more breakdowns like these.